Walmart beats estimates, raises outlook, and sees stable consumer health.
Earnings of 67 cents adjusted. That's higher than the 65 cents analysts expected. The discounter also...
Who's this lady? I never seen her on CNBC, I don't think, in my life. What in the world?
Expectations for revenue with $169.34 billion. That's above estimates of $168.63 billion. The company raised its forecast for the year to reflect its strong first half, saying it now expects sales to rise by between 3.75% and 4.75%, and it expects adjusted earnings to come in between $2.35 and $2.43. I spoke to Chief Financial Officer John David Rainey, who told me that Walmart has not seen a change in shopping trends. He said every month of the quarter was relatively consistent.
John David Rainey? Don't ever trust somebody with 3 names, right?
He said, we see among our members and customers that they remain choiceful, discerning, value-seeking, focusing on things like essentials rather than discretionary items. But importantly, we don't see any additional fraying of consumer health. It also saw strength across stores, clubs, and its website, notably with U.S. e-commerce sales growing 22%. And he said Walmart saw another promising sign. Sales of general merchandise, that's the stuff that's outside of its grocery department, was positive for the first time in 11 quarters, Mike.
That's probably going to be taken...
Wow. That's interesting.
Stuff that's outside of its grocery department was positive for the first time in 11 quarters, Mike.
That's pretty shocking. The first time in 11 quarters outside of grocery was positive. Interesting. That's more proof that you're coming out of the consumer goods recession, right?
That's probably going to be taken as a relief, I would think, by investors, considering that July in particular, I think folks felt was maybe a little bit soft for a lot of the industry.
Yes, John David referred to that, and he also referred to the concerning jobs report that created some concerns. And he said, we are not expecting a recession. He really kept talking about how they've seen consistent behavior, even with the start of the quarter. Yes, people are still watching their dollars, but there's no noticeable change, he said, and that's really the key takeaway here.
I don't know if you have the numbers offhand. U.S. comps or like U.S. comps ex fuel. I know some of the street was watching that.
Yes,
kind of core.
U.S. comps were up, and they were up also globally. And one thing that John David Rainey said also is that they are seeing that people are choosing them not just because of price, but also because of convenience. He pointed to that e-commerce growth. And I think one thing that some investors may have been missing is that Walmart's made a lot of strategic plays here. It's been growing its third-party marketplace, growing its advertising dollars. It's launched a new private label brand in grocery. And those types of things are also moving the needle, along with attracting people who are frustrated by inflation.
Seeing U.S. comps at 4.2%.
4.2.
Ex-fuel.
Ex-fuel, they were up 4.2?
Yes.
I think the whisper going into this was more like 3%. That would certainly explain why the shares are up 5%.
Yeah, exactly. And the other thing that was interesting that he mentioned is that they are seeing people who are just, being a little bit more willing to spend for seasonal items. And so seasons are very important. Back to school, he said, started strong. And generally that's seen as a indicator for the holiday season. So that may be some good news, too.
Really interesting. Shares are up almost 5%.
Looks like an all-time high, actually.
Right now.
Yeah.
Here's the only weird thing. Walmart Jim Paulson has the Walmart recession indicator. When Walmart shares do well relative to luxury shares, that's typically a sign of a slowing economy. So you have to read it both ways. Is it good or bad that they're going up? I think they're going up today for the quote-unquote good reason.
Yeah, and it's gotten complicated with the e-commerce side of Walmart, and
because you think there's a more upscale version of,
and just the market share gains that they've had. It's a little more representative, arguably.
Certainly than 20 years ago.
Yeah.
Absolutely, I completely agree. Much broader swath of the U.S. consumer, or the kind of spending it would capture than in the past. Yeah.
Yes, that's the tricky thing to tease out. How much of this is because of Walmart's own strategic moves versus people trading down? Historically, you're right. When Walmart did well, it was almost seen as a concerning sign. Our even upper middle and high income consumers being forced to go to Walmart. But now Walmart's saying, hey, we're getting, a little fancier, or at least, even though like with Better Goods, its new private label grocery brand, most items are under $5.
Walmart's been a sneaky stock. I got to be honest. I mean, 1 year up 38%. The stock's done very, very well. It's been a sneaky stock, man. Like just one of those stocks that, you don't really kind of think about like who wants to own Walmart stock, but it's a sneaky good stock. So on a 1 year up 37%, that's wild. No, this is crazy. So on a 1 year, Walmart's up 37%. On a year to date, Walmart's up 37%. That's crazy. If we take a peek at the 5 year, it's up 94% in the past 5 years. So, yeah, and then down here in the 2022 crash, it actually bottomed way before tech stocks bottomed. It bottomed in June 2022, $39. So it's getting close to a double there, because that would be what, 78 would be a double, and we're at 73. From those 2022 lows. Interesting.
But it has a lot of flavors that might resemble a Trader Joe's. So it's a little bit more, appealing to a wider variety of consumers.
And perhaps most importantly, especially for equity investors, going back a couple of quarters when they first started to talk about Choiceful, it's such an interesting neologism, not choosy, Choiceful, but that was the beginning of a sign that stock picking in retail was really going to matter, and boy has it. So they're sticking with that theme without saying that they necessarily see any increase in softening of consumer spend overall.
I also asked him about pricing specifically and inflation, and he said it was flat this quarter. So all the growth that we're seeing Walmart report was from units rather than dollars. And
nice.
For a long period of time, obviously, that was coming from everything costing more.
Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. Now, Ulta Beauty, why did he buy this stock? Now, first off, there's a lot of people assuming that it wasn't him buying the stock. It might have been Todd or Ted. Possibility. Here's why I believe it could have been Warren Buffett to actually buy Ulta stock. The business model. This is a perfect business model that Warren Buffett can wrap his head around. Selling makeup, cosmetics. They obviously have their online presence. They have their retail presence. They have great relationships with all the cosmetics companies you would want to have relationships with, right? They're a great run retailer over the last 10, 20 years. And so it's not like it's a complicated business model for him to understand, right? Additionally, the valuation is very attractive. And additionally, the company is expected to have solid, good revenue growth and earnings per share growth in the future. And so for all those reasons, it's actually kind of a perfect Warren Buffett stock. It's a perfect Warren Buffett stock. So I'm not surprised to see him buy Ulta. Now, in regards to the market is very bipolar. And you got to keep something in mind. The market can be extra bipolar when there's earnings going on. So we're in earnings season right now. Opinions can change quickly, depending upon who's reporting an earnings report, right? If suddenly Walmart reports strong earnings, and for the first time in 11 quarters, Walmart comes out and says, we're growing our business outside of the grocery in base necessities area, and general merchandise is finally growing, like they just said, right? Oh my gosh, like that's huge. That means we could be actually coming out of this consumer goods recession that we've been in for the last 2+ years, right? That's seen as a positive signal. It's seen as a positive sign. And all of a sudden, if you get a weak earnings report, some company says this is troublesome, that's troublesome. If NVIDIA came out in a couple weeks and reported bad earnings or bad guidance, believe me, all of a sudden huge poor sentiment all in the whole stock market. It'd be Red Dead Redemption out there, right? If NVIDIA comes in, does another double beat, then does a triple beat, they beat on their guidance as well. Boom, up and away we go. NVIDIA, next thing you know, stock will be 150 plus. Next thing you know, all big tech will just run. We'll see Meta approach a 700 number, right? And so market's very bipolar, especially in earnings season. All of a sudden, 1 minute feels great, next minute feels horrible. And it really depends upon who's reporting earnings and what are their numbers at that particular time. Another thing you've got to take into account that's going on in the stock market is there's estimates about 70%. So the majority of trades that are going through on a given day are done by AI algorithms. And so these these AI algorithms are reading different reports, they're reading different things, deciphering the information. That's how you can see stocks go up a ton or down a ton within 30 seconds of them reporting numbers. How is that even that possible, right? Humans can't do that. I can't read through a whole earnings report and say, I need to sell the stock, buy the stock in less than 30 seconds. No. But you know what can? A machine can. And so it's looking for keywords, it's looking for key numbers. Boom, boom, boom. This beats, this beats, boom. Send the stock up. Right? Oh, this isn't said. Oh, this is a bad word choice here. Boom, send the stock down. So in the stock market now at this point in time, so much is driven by AI. And it creates a less intelligent market. I know it's supposed to be creating a more intelligent market, AI, but I would say it's actually creating a less intelligent market because it's making justifications without all the full details. Even if you have an earnings report, right? How much weight do you put on this thing versus this other thing? You have to be a human to really decipher everything at play here. Like an AI system can't do that properly. It just can't. It'd be awesome if it could, but it can't decipher everything, right? And how's it going to make the justifications before you even get to the conference call, right? And so the AI systems are flawed, but they create a more bipolar market. It creates, guess what? More opportunities for us humans. I love the AI. I love the AI. If it wasn't for the AI, I'm telling you, we wouldn't get these crazy sell-offs. You wouldn't get all of a sudden stocks crash and Shopify to go up 45% in 9 trading days. That would never happen. But because of AI, these ridiculous moves can happen out of nowhere, and all of a sudden you're able to scoop up shares and you're able to get, in a matter of days, the returns that people would hope to get over years. And you get it in days. It's incredible, right? Next thing, humans can be erratic. Now, listen, there's a lot of people in the stock market with a lot of money. And sometimes these individuals, these fund managers, these folks that run ETFs and whatnot, right? They can be very erratic. Their opinions change like in a second, right? Even Jeremy Siegel, the professor. I was watching him recently. He's not really a money runner. He's more of an economist, right? But I was watching him, go back to watch him on Monday of last week. He's calling for the Fed to do emergency 75 basis point cut. He wants him to do another 75 basis point cut right after that. I mean, guy was freaking out. All of a sudden, so erratic, right? It was like the end of the world. And he'd been interviewed not even that far before that, and he wasn't saying anything about that. Then all of a sudden, he gets interviewed yesterday, and he walks it all back. That's erratic, ridiculous behavior. And that's from an economist, a very seasoned economist, about as seasoned as you can get, right? So what do you think these folks that run these active ETFs are doing? These other folks that are hedge fund managers, they can be so erratic. Their opinions change like boom, boom, boom. And next thing you know, they're selling out of positions. They're buying positions. They're in, they're out. Oh my gosh, they're short, they're long. They're all over the place. Their opinions are all over the place. And it's like the market's not changing that fast. The dynamics in the economy are not changing that fast. The dynamics in company earnings are not changing that fast. So the fact that your opinion and you're so erratic up and down all the time, but you got to remember, these folks that are the fund managers that are running the ETFs, all these sorts of things, you got to understand they're dealing with a lot of stress. They're dealing with a lot of stress on their shoulders, right? And I would say the far majority of them don't know how to handle their stress. They don't. They haven't learned meditation. They haven't lived a stressful life. They might not have had a stressful enough childhood and those sorts of things. So they haven't been through it. But a lot of people are attracted to finance for the money because it's a lot of money, right? And who doesn't want to be rich? So these folks go down this path that they might not even be meant for. Not everybody's meant for this game. Not everybody's meant to run money. That's the thing you got to understand. Not everybody's meant to run a portfolio. Some people are. Some people can be very well trained and they can do that. And they're programmed to do that, right? Some people aren't. But they get into this because of a lot of money. So they don't even know how to handle stress. And when you don't know how to handle stress, right? Guess what? Your behavior is going to become very erratic. Additionally, with a lot of these individuals, we got to talk about substance abuse. Listen, there's a lot of substance abuse out there when it comes to folks that run money, okay? A lot of these folks, I'm just telling you guys, I'm just being honest. A lot of them have drinking problems. A lot of them have more than drinking problems. They do other stuff. This is like something that's known out there on Wall Street. Like, ask anybody on Wall Street, they're going to tell you what, some of these people are on, okay? And so you've got to understand, when you're dealing with a lot of people that have a lot of stress and potential substance abuse, you're going to deal with erratic behavior. These folks' emotions are going to be all over the place. One minute they're going to be out, next minute they're going to be in, next minute they're doing this, next minute they're doing that. They're moving all around. They're going a million miles an hour, right? And it is what it is. Like, you just got to understand. So between these two, you're going to have a very bipolar market. Now, in regards to these humans, if they can't learn to handle their stress, you know what a substance they should do? They should go down to Planet, get the fattest fatty from Jack Jackson. Whenever they're thinking about they're going to make this crazy move, I'm going all in the market, I'm going all out, I'm doing this, blah, blah, blah. Like, they should just smoke the fattest fatty down there and just chill. Just chill, man. Relax a little bit, okay? By the way, speaking about the Planet, this was this past Friday, late afternoon. Took a picture. Planet's getting busier and busier and busier. They're doing so phenomenal, starting to attract traffic there. Wait to see the numbers for the remainder of this year and going into next year. And they got more coming in regards to build out of the Planet and new attractions they have there. Bob and Larry, they were talking on the conference call about they're attracting, I believe he said, over 100 or several hundred people a day just for the tattoo parlor that's in there, right? Which just brings a crazy amount of traffic. And they're just adding more and more things. They have the lounges in there now, the bar. Oh my gosh, like, it's incredible. Now, in regards to the Planet, we're on the path back to 7. It has started, folks. 72% up very quickly here. The path to 7 has started. And for the first time in years, the fundamentals in regards to Planet are starting to get better. Now, in terms of this year, analysts have the company doing about 28% revenue growth. And then in terms of next year, analysts have the company doing about 40% revenue growth. I believe the number is too low for next year. I believe the company will do over $200 million of revenue. The Vegas location alone is going to put up ridiculous numbers in 2025. Additionally, Orange County continues to get stronger. They got the wholesale business coming there very strong. The Illinois store open for a full year. It's going to be massive for the company in 25. The Florida, they're going to have 30 plus stores open in 2025 and a full year of revenue recognition there. So I think they're going 200 plus next year, which is going to be huge. And keep in mind, in regards to Planet, the whole dang market cap of the company is around 200 million right now. So we're talking about, I believe they're going to do about 200 million in revenue next year for a $200 million market cap. And for a company that has this sort of growth rates, oh baby, are we talking, we're going back to 7, where it's going to be a process to get there, but it's going to be we're going to climb the mountain.